US banks in the last week is spooking share markets right across the globe, including here in Australia. But despite the fear, there may also be some good news for Australians, particularly when it comes to rising interest rates. So what does it all mean? Let's bring in Research Director at Rate City, Sally Tyndall. Good morning to you, Sally. First of all, let's start with what caused these US banks to fail.
Well, ultimately, Jane, it was a run on deposits, customers all taking their money out at once. But you've got to look at the lead up for Silicon Valley Bank in particular. They had predominantly tech-based customers. Now, some of those startups got the wobbles and they wanted their money back. But the bank had invested in long-term bonds and the value of those bonds had gone down as a result of rising interest rates. And so when the customers wanted their money back, they had to sell the bonds at a loss. And they could have contained all of this. However, Twitter got hold of this. It spread like wildfire, and suddenly a vast majority of their customers are all panicking, thinking they're going to take their money back. That's when the regulators had to step in and shut down the bank. And then, of course, it spread to two others where they had to shut down Signature Bank just moments later. First Heritage also got the wobbles as well.
So these are all banks that sort of work in that tech space.
Yeah.
Silicon Valley Bank, though, is the largest one to fail since 2008, which of course makes people worry, could this mean another GFC? Is that likely?
Well, look, you've got to look at the fact that it was a very unique set of circumstances. So I don't think it's likely at this point in time. The US regulators came in really quickly and guaranteed everyone's deposits. Typically, they guarantee everyone's deposits per account, per person, up to $250,000. That's the same as here in Australia. They've stepped in and said, you know what, we're guaranteeing all deposits. And that's really helped calm things down. But what is concerning is how a crack just came, a complete collapse within the space of hours, really, at the end of the day. And that has people rattled.
All right, there's another global bank that's in trouble, Credit Suisse. It's been, sort of in trouble for a little while. What is happening there, and could that have any impact here?
Yeah, okay, so Credit Suisse, quite a different set of circumstances. They've had just a run of scandal after scandal after scandal, tax evasion, espionage, corporate espionage, money laundering, a chain of CEOs coming and going. So the problems have been deep-seated. But of course, the events in the US have got things rattled in the EU as well, and one of their biggest investors, or their biggest investor, came out and said they're not tipping any more money in, which saw the share price tank. But again, the Swiss National Bank stepped in and said, we'll give you over $80 billion to shore things up, and that has really helped steady the ship.
Well, let's get to what this all means here. What does it mean for the Australian banking system, and most importantly for people with a mortgage, interest rate?
Absolutely. Look, global things that happen globally really do rattle the whole market, but our banks are on incredibly solid ground, and so they can absorb shocks like this. They have to hold a significant amount of capital. Since the GFC and the Royal Commission, they've really made sure that people are borrowing responsibly. These things hold us in good stead. You only have to look at Australia's biggest bank's profits, $5.15 billion in their half-year profit. That was a record, to know that we're on solid ground here. But the big question is, what does this mean for rates? In the US, there's speculation that they might even pause next week. They were talking about a double hike. Now people are talking about a pause. The same conversation is happening here. What does it mean for the RBA? Will they pause in April? Look, Westpac came out just yesterday and said they think that the RBA will now pause in April. They think that the global factors, combined with the fact that the RBA was considering it, means that yes, they will pause. But then you've got, ANZ, NAB, CBA, they all think the RBA will push ahead with a 0.25% hike. They've got to get the inflation problem under control. Yes, there's spot fires, but they'll be putting them out, isolated, hopefully, and pushing ahead with the inflation task.
We'll all be watching with interest, Sally. Thank you.